right, good morning, everyone. Thank you so much for joining our panel. I am so privileged and honored to be on the stage with these three gentlemen who are true champions of our industry. Can we just give a quick round of applause for Senator Budd, Congressman Flood, and Congressman Davidson for all you do?
Thank you.
Thank you. Gentlemen, I'm excited. The next 25 minutes, we're going to talk about the politics and policy of custody of crypto assets. What's happening in Washington, D.C., the efforts that you guys are taking and leading to create a future in which people can custody their own assets natively on blockchain, as well as what custodians can do for people who want the option of having a third party custody large amounts of digital assets natively. So Congressman Flood, I'd love to start with you. Last week, you led the charge on a resolution to repeal SAB 121. For those who don't know, SAB 121 is a staff accounting bulletin. Yes, you heard that right, a staff accounting bulletin is what we're going to talk about. That took a really novel approach, saying custodians that hold digital assets for third parties actually have to hold them on balance sheet. And it's novel because no other asset that a custodian holds is ever held on balance sheet. So could you talk to us a bit about your passion behind why it's so important to repeal SAB 121 and what that means for the average consumer?
Well, to be honest, Gary Gensler at the SEC is a fountain of bad ideas. Every day we come to work in Congress, we deal with another bad idea that federal regulators are working to keep crypto out of the United States of America. And SAB 121 essentially has frozen all publicly traded banks out of this space. And some of the largest banks in America that custody literally trillions of dollars aren't engaging with digital assets. And so what's really troubling about what the SEC did here is they didn't follow the normal rulemaking process. Like you said, they used a staff accounting bulletin. And the GAO, for purposes of the Congressional Review Act, determined that SAB 121 was effectively a rule that could be struck down by Congress. And so we filed a CRA. And here's what I think is the most promising. I filed it with Rep. Wiley Nickel from North Carolina, a Democrat. Obviously, I'm a Republican, so it was bipartisan. And when the vote came down, after President Biden threatened to veto it, we got 21 Democrats to vote in favor of repealing SAB 121, which I think this is the first time, and Congressman Davidson and I talked about this is the first time we've had anything crypto-related on the floor of the House of Representatives. And for 21 members of the Democratic Party to do that, I think is a really promising sign. We're hopeful that it passes the Senate this week, and I think it's getting the SEC's attention that we're serious.
Speaking of the Senate, Senator Budd, and any thoughts for the crowd on process, next steps, and prospects of success?
Again, Dan, thanks for having me here. What it takes is 30 signatures. We have bipartisan signatures. Cynthia Lummis, Senator from Wyoming, great champion of this. She is on the Banking Committee. I did serve with Warren Davidson in the House on the Financial Services Committee, so he was always the point man for all things crypto. I learned so much from Warren over there. Great to consider him a friend as well. We have the signatures, we've filed, that is to make a discharge petition, which forces it out of committee and onto the floor. So that's been done. So we could see this coming onto the floor in the next day or so.
That's incredible. Any prognostication on success or just building bipartisan support in the Senate, either for this time or for future efforts?
I'll let them speak to the House. I think it can pass the Senate, but it very likely will be vetoed by the president. But it really sends a signal for the next administration how they should approach this.
Exactly. And well, so speaking of signals for the administration, and Congressman Flood, you had mentioned Chair Gensler has been a fount of maybe misinformed ideas. Another custody topic that's been concerning for the industry is the proposed revamp of the custody rule. And I mean, SEC Commissioner Uyeda himself has said it's a no-win situation for crypto assets because the proposed rule would say, well, state banking institutions, state trust companies may not be able to custody assets for registered investment advisors. And that's how, most investors hold their assets when we want to hold crypto assets. Can you talk to us about why would the SEC want to prevent state banking institutions from custodying crypto for advisors?
Yeah, the qualified custodian, effort that's underway really syncs up with what I think the White House, the SEC, a lot of the federal partners have, how they've approached digital assets. They want a federal, top-down regulatory environment. When I was in the Nebraska legislature, I passed a bill that made Nebraska the second state in the union to allow state-chartered banks to custody digital assets. I also created a de novo digital asset depository institution. I believe that state legislatures are the laboratories for democracy. And I sent a letter over to the SEC with Congressman Richie Torres, a Democrat from New York. And I will tell you, if you talk to Democrats from New York and California, they have DFS, Department of Financial Services agencies that want to be and are at the front end of digital assets. And I think you're going to see I'm going to lay my life down on the track to make sure we have a two-tiered system, just like we have a two-tiered banking system. One of the greatest things about our financial services system in America is that it's diverse. It has diversity. We're not like Europe with 6 GSIBs. We have the GSIBs, we have the regional banks, we have the community banks, we have OCC banks, we have state-chartered banks, and that's what makes our system so strong. And to have a top-down digital asset hand on everything from the federal government is a step too far, and there are Democrats that agree with us.
Congressman Davidson, with these federal efforts to make it hard for third parties to custody crypto, I think it really reinforces the power and necessity of self-custody, right? If you can't go to a bank or a trust company to hold your digital assets, you've got to be able to hold it yourself. And now you and Senator Budd have been champions on efforts to lead and protect the right to self-custody. Can you speak to what on Capitol Hill has been helpful to explain to your colleagues? Like, what narratives are persuading minds, particularly as you see kind of this onslaught of a regulatory push to prevent custody by third parties?
Well, what Gary Gensler intends for evil, hopefully we can use for good. People see the excessive overreach. They see Operation Choke Point 2.0, 6.0, whatever version of this. And that's essentially the regulators debanking people and, frankly, collapsing banks. They drove Silvergate effectively out of business, and they basically closed on Signature because they banked crypto. And look, that's a view that's shared by Barney Frank of Dodd-Frank fame. So, it shouldn't be viewed as a partisan action. It's just this is what they're doing on the back end. And in the hostility to crypto, you're like, well, why are they so hostile to this space? I think they've at least realized that they can't ban crypto, so now they want to keep it account-based. And when you keep it account-based, you effectively gut the whole premise of the space. You eliminate intermediaries, by eliminating third parties. And that is, of course, Satoshi Nakamoto's white paper, Bitcoin's white paper is all about a permissionless peer-to-peer payment system, and that eliminates the whole idea that you would have to have a trusted third party. Well, what is the trusted third party? It's a party the government trusts because they don't trust you. And it's somebody that they can control because they're afraid they might not be able to control you. And if you think about the space, we speak of DeFi, well, decentralized finance. You can't have the D part of this without self-custody. And, the reality is most people are going to want some permission, trusted third party to custody the bulk of their wealth, just like we have with banks. And while they haven't completely made cash illegal, it's almost that way. But nevertheless, people want to have a depository institution to trust, to custody their things. They're a little nervous about the idea that they might forget their password, let alone 12 or 24 phrases, right? So they want a lot of that custody in somebody else's hands, but some portion of it they want to be able to have, and not to be secret, but to be private. And the whole idea that you have a public blockchain with private keys should make it clear that there's privacy, not secrecy. And you see the enforcement actions that are very calculated by Gary Gensler. It's not that he is taking the positions he has in spite of the consequences. He's for these positions because of the consequences. And he's sown this chaos, I think, skillfully and in violation of the law. So if you look at the regulation by enforcement against debt box, you had attorneys that would normally get disbarred for doing such things. Hopefully we'll bring some accountability to that. But you look at the enforcement action against Coinbase, where they went public and said, here's our whole business model, but we want to have a public offering. And they did. They finally got clearance. They did their public offering, very successful. They've done really well. But Gary Gensler brings an enforcement action. They dropped one of the 4 enforcement actions on the Coinbase wallet. So you think, oh, finally, some custody solution that isn't getting nuked by the regulators. And the very next day, because this would be viewed as good news, they take a Wells notice and send a Uniswap to target custody. So I think this has been in the crosshairs, whether it's FinCEN, Treasury, the SEC, or the IRS, in every way they can. And it really is about control. It's how do we channel people into a third-party system that is regulated by an entity versus individual freedom. And it really is property. We talk about self-custody, and people think, oh, well, what is this? They talk about wallets, hardware wallets, cold storage. And for the novice, they don't really understand that we're really just talking about owning your own property. And the idea that you can somehow ban somebody's ability to download software and memorize 12 words is crazy.
You mentioned, Congressman, right, that SEC has gone after Coinbase for the Coinbase wallet, and that count was dismissed, but it hasn't deterred them from similar actions, right? Uniswap, there's a Wells notice to Consensus, and they are fighting back proactively. DOJ measures with Tornado Cash. When you're talking with your colleagues about these issues, and I'm curious in the House, so between Congressman Davidson and Congressman Flood, what are critics or skeptics or just the uninitiated, what are the things they're hearing that resonate with them when they're hearing from colleagues who say, oh no, self-hosted wallets create a lot of risk? And on the Senate side, similarly, like what are the narratives you encounter that critics say justify these measures to prevent self-custody? And are they resonating with your colleagues who maybe aren't as glued into this issue?
Well, it's illicit finance is what they hold up, and of course this is Elizabeth Warren's crypto army that they point out, like we have to keep people safe, we have to catch the tax evaders and money launderers and all forms of illicit finance. And the reality is a very small fraction of illicit finance is on a blockchain. If you were trying to get away with something, you certainly wouldn't want to create an immutable public record of it. And because a lot of crimes have been solved with the ability to follow the money on a blockchain to the off-ramp, you're seeing less of this. And that's the argument, though, is basically security for freedom. And it's a complete corruption of the Fourth Amendment. And it's basically the idea that, well, if you have nothing to hide, then you have nothing to fear. Just come in and talk to us. And that is not the system we have in the United States of America. But a lot of people trust this idea that, well, the government will keep us safe, they'll protect us, the regulators are there to protect us, and they haven't yet shifted over to where historically things have gone. Look, most of the people there are good people, but the reality is they're human, and so eventually it becomes a tool for coercion and control. And that is at the heart, a central bank digital currency is the end state for some of these people. It is the most creepy surveillance tool ever developed. And unfortunately, all the countries around the world that are working on central bank digital currency are copying the Chinese Communist Party's model that links it to digital ID, that links it to social credit, that ties it to this very overt tool for coercion and control. And I think in the US, we haven't yet caught up to that in a bipartisan way, the creepy surveillance state version of it. And I think once you do, you'll see the same split that you see that really doesn't break on party lines that you see on privacy. And we got a big win on the Fourth Amendment's not for sale. We had a FISA, get a warrant spy, Foreign Intelligence Surveillance Act fight. And a lot of people might know this space more commonly by the Patriot Act. And the idea that if you think that the government should be able to know everything about everyone just to keep us safe, you probably like the Patriot Act. And you probably hate crypto. And on balance, people that love crypto tend to dislike the Patriot Act. And when we start to see people become informed on these things, I think you'll see that the split really is similar. And in the House, when we had that vote on the Fourth Amendment's not for sale or the get a warrant, it was 123 or 126, respectively, Republicans, and 84 versus 96 Democrats, respectively. I don't know that we'll see that same vote count on the CBDC ban we're supposed to have next week, but I sure hope we do, because logically it's a very consistent position.
I think your question brings up a really important point, and that is, like, we could be voting on a Fit for the 21st Century bill next week, our market structure bill. We have to remember that oftentimes members of Congress and the House of more mature age live their entire life with fiat currency, obviously, and you have to start with building blocks to explain where we're going and why we're going there, where maybe younger members of Congress are more open-minded to the whole digital assets conversation. But I think it's incumbent upon everybody in this room, you have to take the time to call your member of Congress. You have to ask for time to sit down with them and start at the base level, and use cases are the most compelling way to change someone's mind. What I do in Nebraska all the time when I explain what I'm doing is I talk about Web 3.0. I talk about the fact that the Facebooks and the Twitters and all that other stuff, it's going to change. You're going to start giving your data in return for some kind of tokenization. And when I can explain that, people understand why we're going into digital assets. Bitcoin is what they want to talk about. FTX is what they want to talk about. I want to talk to them about stable coins. I want to talk about them about tokenization, how this fits into their life. And I think this week, Congresswoman Houchin from Indiana and I are going to host all the freshman members to talk about our market structure bill. And we've got some folks in the freshman class that are really concerned about doing anything in digital assets, and they're Republicans. So I guess to your point, everybody here needs to reach out to their elected leadership, and you need to take time to educate them. And start very simply, and then go as fast as the member wants to go.
I would totally agree with Congressman Flood. And you mentioned members of a more mature age, I believe. Let's talk about the Senate now, okay? So where I do bring the average age down. So I think the major concern is illicit state actors that we hear on the Senate side. It's how Iran moves. It's what Russia's using to evade sanctions. North Korea, particularly, we're seeing since October 7th, it's what Hamas would use. But if you look at it, it's still, it's not crypto. It's not digital currency. It's old-fashioned extortion. It's cash. It's drug and human trade that they're getting money from. Anyway, I don't think it's the issue. I think you got to push back, and we need to hear. We need to hear reps. We need to have you coming in our offices and explaining it in layman's terms. I was on the Financial Services Committee. Now I'm not on a committee of jurisdiction, but we still are very interested in this. And this is about protecting a framework of American freedom and innovation, because if we're hostile to it, particularly through the SEC here, you are going to continue to do what you do. It's going to continue to innovate. It'll just be done elsewhere, and maybe not in such a friendly country as the U.S. So we'd like to have the framework, the regulations here, which make the innovation happen here. Not only is it good for us, we think it's a great country. Even though with all of our challenges today in the U.S., this is still the best place to innovate.
Senator, you raise a really good point about trying to keep innovation here, keep custody here. And I think actually that matches really well with some of these concerns about sanctions evasion and the use of crypto by illicit actors. The way our sanctions regime works is you tell banks, money services, businesses, trust companies, when you receive funds that we, the government, have sanctioned, you need to hold them and not let them go out the door, not let them go overseas so that they can be spent. So the whole nexus of why sanctions works is because, one, people need the US dollar, and then two, we have US custodians to hold those sanctioned dollars. In the crypto context, it would be the same, right? If you want to prevent sanction, or want to have an effective sanctions regime, you need custodians then who are able to hold those tagged digital assets. Is there any discussion among colleagues to raise these concerns? Are they not connecting kind of those two dots, that what the SEC is doing on the one hand makes it harder on the national security end? And how can we help make that case maybe a bit stronger to them?
Congressman Davidson and I see some of these issues a little differently. I think our strength in national security comes from our financial services system. And I like the fact that with blockchain and digital assets, you can trace where nefarious actors are trading arms for cash in continents far away from ours. And I think, to your point, that is our biggest benefit on the world stage. We just got done on a financial services trip with Chairman McHenry. We went to Singapore and we went to Abu Dhabi. They've got a $1.5 trillion state growth fund in Abu Dhabi, and they want to be in digital assets. They want to be in AI. They are in these spaces, and they're willing to spend more money. They're setting up a regime in UAE and in Singapore for digital assets, and they're ahead of us, quite frankly. But when push comes to shove, they say the only way for this space to be mature is for the United States to enter the market. And so they are waiting for countries like ours to lead. And we don't want to find ourselves in a spot 5 years from now where China figures this out, or one of our European partners figures this out, and all of the focus moves across the pond far away from our system, where we have the world's reserve currency right now.
If you look at banking, banks in Dubai and Doha are essentially funding Hamas. It's not Bitcoin that's funding Hamas. I'm not saying they've transferred none, but as a percentage of their money, it's moving through the traditional banking system. Now, largely it's moving through a banking system that's outside the US, but with the US dollar as the world's reserve currency, part of the pressure in the world has been to find ways around that. And you see that, frankly, breaking, in part because of our massive debt, but also in part because of how heavily we've leaned on all these permissioned accounts. And so people are choosing not to hold their wealth in dollars, and in some cases not to measure their wealth in dollars. The reality is people that accumulate wealth by not holding currency, they accumulate wealth, except for FX traders and all that, people accumulate wealth because they've invested in some sort of asset. And that grows the wealth, and then you want a way to spend it. So you're seeing a total corruption of money that basically turns it into a tool for coercion and control. And the idea that we are going to do to the dollar what China's done to the RMB and still be viewed as a unipolar world where we are the world's superpower and we are the world's reserve currency is being undone, because the reality is people say, well, then we should have a multipolar world. We want a competitive world where if these guys are going to use a tool for coercion and control, we'll go with those guys, and you'll have a little bit of currency in multiple currencies. And that is exactly what's happening. So, we need to let the money be the money. It should be a store of value and a means of exchange, an efficient payment system, and it needs to represent cash. It can't be something that is completely permissioned. In a permissionless system, you can use it like cash. You don't have to get the permission of a third party. But the trade-off there is that if it is on a public blockchain, then when you do have probable cause and a reason to find who did what to whom and where did the money flow, you can follow it. And so I think if we don't create this framework, the alternative is you'll have a multipolar system of central bank digital currencies, and there won't be freedom. There won't be privacy. There will be essentially go back to the days where your level of freedom depended upon the grant of power from government. And when we have freedom, the politics follow the culture. And the hope is that in this place, the politics follow the culture. And, I think Republicans broadly are united in this space. And unfortunately, Democrats are divided, partially because they want the central bank digital currency in state. And if you go the other way, and you've got an authoritarian system, well, then the culture follows the politics. And for as much talk as there is about authoritarian systems, look at who wants to use the government as a tool for coercion and control. Don't look at the political rhetoric. Don't look at all the flags and momentum things. Look at the policies and say, who supports a policy of coercion and control? And that begins with surveillance, and that begins with policies that basically push you away from owning your own private property and push you into some account-based system that can be controlled by the government, or in the most coercive system, an account-based system that is only with the government. So I think that's the spectrum of ideologies there. And it really is at stake in this fight.
In our last couple of minutes, it's an election year, so we have to talk about politics a little bit, and this is a terrific segue. Congressman Flood, you had 21 Democratic House members join your resolution. That's 10% of the caucus in an election year, a contentious one. That's incredible. How did you build that bipartisan coalition? And then to all the panelists, how do we help you build that coalition further in the House and in the Senate, given how polarized we are, given it's an election year, right? Everybody's trying to win their race. How do we, help push this forward towards not just a Republican issue, but a forward-thinking bipartisan issue?
Well, currency shouldn't be a partisan issue. This shouldn't be a Republican-Democrat issue. And I think 21, I was hoping for 10 Democrats. The fact we worked with Wiley Nickel from North Carolina, who's a Democrat House member on financial services, he made calls within his conference. And quite frankly, there are a lot of up-and-coming leaders on the Democratic side that care quite a bit about this issue, and they understand it. And what's even more encouraging is Congressman Nickel told me that he had a lot of members on his side that came up to him during that vote and said, this is bad policy, but I can't vote against the president. I mean, the President of the United States said he was going to veto the bill earlier in the day. But I think if you polled those Democrats privately, you'd find out that there's a lot more support over there than that 21. And we're going to see that next week when we start voting on our market structure bill. So if you're from the state of New York, you want to support a state pathway. You want to support DFS. There's wealth being created there. One of the things I would recommend, and it's a shameless pitch, but I always say, find me on LinkedIn, because we have to be communicating, not rhetoric, we have to be communicating how are we going to connect with members on this issue when it's something that not everybody understands.
Any final words, Congressman Davidson, Senator Budd, on what we can do to help you guys with these messages that Congressman Flood is mentioning?
Yeah, I would say your question about the critics is very important, because I would start by going into these offices and understand, even if it's somebody who might be hostile, have a staff meeting and the person that would be over the jurisdiction here and say, we think you might think this, but here's the truth. Here's why this is not true. Here's why digital currency is good and why it's good in the U.S. And here's what happens when you oppose it. It pushes it off. It hurts innovation in the U.S. and makes us less competitive as an economy. It's going to happen. We just want it to happen here. So I would say stay in touch with us. And what you're ultimately against is against lack of clarity and hostility. Those two things will choke down innovation, whether it's digital currency or anything else.
Last thing I say, just good governments defend freedom. Tell your member of Congress or your senator, member of the House or Senate, say, please defend my freedom. I want to own my own currency. I want to own my own property. We have property rights in America. Please protect them. If you protect privacy and property rights, this industry will flourish. And if you don't, I don't think the industry will flourish in America, but frankly, it'll be a bad sign for flourishing of freedom in our country.
Gentlemen, thank you so much for all that you do. Can we give them one more round of applause for their leadership? Thank you.
Thanks, Dan.
Thank you so much.